Welcome back to another episode of the Crypto Mavericks, and we have a great podcast guest, or I should say guests. Today we have Mike, head of Open Finance, and of course we have Kevin, who is the founder of RAAC. And you may be asking yourself, what is RAAC? It's a lending and borrowing ecosystem powered by real world assets. Everyone knows that we're big fans of real world assets. We're big fans of NFTs or any opportunity in the Web3 space. Kevin and Mike, really happy to have you on the podcast today.
Hey, Brian. Thanks for having us. Super excited to be here.
Good morning, Brian. Thanks for having us.
Yeah, we're super fired up to have you guys on today, and maybe we'll start with Kevin here, being the founder and all. Kevin, give me a little background of your world in Web3, how you got into this crazy world, and then we'll hear Mike's side of the story as well.
Yeah, for sure. My journey in Web3 starts, I would say, at the tail end of 2017, where I feel like a lot of people got into it. Jumped in right at the end of the bull run. I was an accounting and finance student, and XRP blew my mind at the time, and I was like, "This is it." And that was my foray into crypto, and I kind of got lucky enough to be placed into like a fintech course. And you had to write about a specific financial technology. And the first topic on the list was AI. And it was like corporate audits are going to be replaced by AI in the 2030s. And I was like, ooh, that's not a great value proposition for an accountant. So I got really far down the list to B and read about Bitcoin. And from that day, my mind was just blown, orange pilled. And I thought I was going to be a crypto accountant, kind of graduated, dropped the accountant part and just focused on crypto since then. And moved in from like 2017 days of like Neo. What else was a big one? EOS, things like that.
Oh, yeah.
And then DeFi came on, and it was like you could earn yield on your crypto, and that kind of leads us into today, and never have looked back since. So been about 8 years now, and been full time since 2020.
I love that. That's amazing. And Mike and I were talking before the podcast started, and we were talking a little bit about XRP. And I know he got in at a similar time, and I was around a similar time. And man, things were electric in 2017. I'll tell you that much. And then we obviously had our end of the fun there for a little bit and went into a couple of years of a bear market. But you guys, you've
I
been
think
in
2020 was the electric part.
Yeah,
because that's when open finance started to really show its capabilities, right? That's when people were introduced to, yield
DeFi
farming. Summer. Yeah, or what it's coined to be, DeFi summer. Yeah.
Oh, man. I loved those days too. I couldn't believe it, to be honest with you. I was like, wait a minute, like what's this percentage I'm getting for staking or lending? This is amazing. It was crazy times, and I think we still have.
But Brian,
ways to go.
It follows traditional finance, like risk parameters, because traditionally more risk taken should be rewarded more. And in 2020, the space, the open finance space, or what is called decentralized finance, people say today, there's a lot of risk. Unknown applications, designs. People were introduced to really having to know that you're interacting with contracts, and unfortunately sometimes things happen. So you needed to be paid to attract participants.
Yeah, that's a great point. I mean, there in scams and phishing attacks and everything have become more, unfortunately, more prevalent, and people get hit hard sometimes. And you're right, you need to reward people because they are taking a big risk with real money at the end of the day. And unfortunately, when you talk to a lot of people who got in around the same time that all of us have gotten in, or even a little bit shortly after, and even now, there's a big risk if you're not taking the right steps, especially if everything looks good on paper, and then one misclick or one faulty move, and all that hard work goes away. So yeah, you're exactly right. You have to be very diligent and very careful with what contracts you're interacting with, what protocols, what websites. I mean, I'm just amazed how some of these scams have become even more and more sophisticated. I don't even click links anymore. To be like, I just like I do run them through like some AI capabilities and things to make sure they're okay. But if I get anything, I don't know about you guys. I get a phone call, 5 phone calls a day that like I'm apparently approved for some sort of like home equity loan, and I'm like, this just started happening over the past 6 months. And obviously, I don't answer any of them, but it's just crazy how these scammers prey on people.
Yeah, I mean, even like within crypto, the sophistication of attacks has increased significantly. I think we've all seen that, and like you said, the amount of due diligence, the fact that you're not even willing to click a link at all, right? That like that's the type of like risk profile here is the slightest miscalculation will be the end of you. And yeah, I think that's also one of the toughest parts about onboarding retail and kind of normies. I would say is that fear and the amount of digital hygiene and OPSEC that kind of comes with digital assets is a tough kind of barrier to overcome. But I feel like once people kind of understand those initial checklists that you do, like you receive a message, okay, hold on, is it from who you know? What are they sending you? That those type of things. But yeah, the amount of attacks is increased significantly, and sophistication.
Yeah, but I mean that's why I love what we do. We're always trying to educate and help people through it. I mean, nobody's perfect at the end of the day, but we always try to highlight as many solid teams and as many solid projects and protocols as we can. So, our audience and our community could just, interact and at least, get some sort of foundation before they jump in. So I want to talk a little bit about this for our audience here. For those first hearing about RAAC for the first time, in simple terms, really, what is it and what does it do?
Yeah, I think I always like to start with the high level overview, and MD as the head of finance is open finance is much better at diving into the details. But essentially, what we allow is for people to bring traditionally slower to settle more liquid assets that still have value, and we allow them to be collateralized on our platform, and we deploy the borrowed capital to DeFi to generate returns in a very plain and simple one sentence. And I'm sure MD is dying to add some context to this. So I'll let him hop on.
Thanks, Kevin. At a high level, like RAAC's really driven by 4 tenets, like we call them the 4 pillars. So, Brian, as you probably have talked over your shows many times, there are low-hanging fruit for the technology to be expressed in finance. Like the blockchain tech is a technology that can be applied to finance. And so in open finance, there's a lot of borrowing and lending, and that's a good business. So the first thing that RAAC wants to open up is a borrowing and lending capability through our digital platform. Mm-hmm. Now, the second pillar is a collateral type. So there's actually a concern in open finance because all of this borrowing and lending activity that's happening is done with volatile assets like Bitcoin or Ethereum or other digital assets that people use to borrow against. And that makes the whole experience from a risk management perspective just very tedious and much riskier than it needs to be. Right. So we think by bringing in real world assets like real estate and gold that have different risk parameters than traditional crypto. You could insert a more stable collateral to do this borrowing and lending. 3, Brian, is liquidity. The world in finance needs liquidity, and so does open finance. And so one of the ways that it's being expressed today is through the stablecoin issuance in business. And like that business has grown tremendously in 2025 to something in the order of like $250 to $300 billion in size. But that still is so small compared to the size of risk, because risk, when you add up all the other digital assets, that's like 3.5 trillion. So that's like 10 times like stable assets. So we think by using real world assets to create a stable token to participate in the liquidity demand is a good business. And then the 4th pillar is around the whole protocol. And that's the reward layer. And because we've adopted a lot of design features that are working in open finance, so a lot of the designs that RAAC have picked up, we've tried to use processes and designs that are already working. So we know they've been battle tested, and we know that there's assets on these technologies. And so by intentfully building the reward layer, you can put multiple ways for folks who are participating in RAAC to win in the long term. We can't control that, but that's the objective of the 4th pillar. And I'll stop there.
No, that's great. And your website mentions here you build stablecoins backed by commodities and facilitate borrowing via real estate and capital markets. Can you kind of break that down a little bit in simple terms for the listeners?
Kevin, did you want to do it, or did you want me to?
Yeah, no, I'll let you take this one, sir.
I mean, Brian, this is where you might have to just borrow a page from traditional finance. So some participants are familiar with like a margin account, like at a Robinhood or Interactive Brokers or your own financial institution if you participate. The process of that is you have an account, you deposit assets, you buy an equity, a security that is borrowable against. And then if you choose and you control the risk, you can borrow against that security position. So that's how like margin. Open finance has just borrowed that process, and with the technology has allowed folks to do it in a decentralized way. So it's the same thing. You have to come to the protocol, bring a whitelisted asset. I mean, you can control what you want to intake. Let's say it's like Tether's USDC, or we are going to be using Curve Finance's Curve USD in our application as the borrowable currency. But yeah, it would follow the same process. You'd come, you deposit an asset, and then the protocol has parameters preset to how much you can borrow against, what's the interest rate, and it gives you all that. And then you're free to use that borrowable dollars however you want. You can keep it in your wallet. You can try to find other uses for it. You could spend it, but know that you have this kind of borrow lending situation. Does that help, Brian?
Yeah, that's perfect. I just wanted to clarify for any of our listeners. So what kind of assets are you currently tokenizing? Are there specific regions or sectors? I see an article here that RAAC adds 200 million of gold to DeFi. Would love for you to touch on that a little bit.
Yeah, so we're actually partnered with a publicly traded company called Ion, and Ion focuses on the actual tokenization of the asset.
Awesome.
Specifically, what they focus on is in situ gold, which means it's gold in the ground. So in our scenario, Yeah, it's really interesting, and
How
they
do-
actually have.
so just curious about how do they, maybe you're about to touch on this, but when we talk about gold in the ground, is it just from like prospective mines that they're like, hey, we think there's like this amount of gold in the ground? I've always been curious about how they're estimating the amount of gold in the ground.
Yeah, exactly. So generally, there's a couple different kind of reports depending on geographically where you are within the world. But North America, they generally use what's called a 43-101, which is an instrument that needs to like a mine or any kind of company would need to have to offer anything to the public. And basically, you can have like two types. You can have um, kind of what's verified and what's inferred, like you had just mentioned. So, depending on if it's verified or inferred, you can kind of get a good approximation with accuracy on how many expected ounces there would be. So, let's say there was 1,000,000 ounces. What happens is it gets discounted because it's in the ground, right? So, it may be
Mm-hmm.
valued at a 5-to-1. So even if there is less extracted, you have that buffer to make up for it. So the really unique thing is you can either leave the gold in the ground, or you could extract and refine it. And as people do that, or users of the platform do that, their collateral backing would rise.
Mm.
So for gold, it's interesting because it works with in ground, out of ground, in production gold, as opposed to purely being in a vault. And what makes it a little bit more unique is you're able to kind of bring that appreciation on chain, and gold kind of becomes a productive asset as opposed to a static asset with like custodianship costs and management costs yearly, right? So it's a really unique angle, because also what it allows us to do is turn pre-production mines into revenue generating assets, which can't really be done very easily. And with the price of gold increasing, the scalability and the ability to find clients and push this further becomes much easier. And like I said, the biggest thing is Ion is SEC compliant, so they actually have their methodology is basically approved by the SEC to be able to value gold on the balance sheet in this manner. So it's a very unique use case between RAAC and Ion to bring this together.
Very cool. And your site says notes that liquidations on RAAC don't trigger direct liquidations of the real world asset property. How does that mechanism work, and why is it designed in that way?
Yeah, I mean, I think like just like MD had mentioned, very much so we rely on kind of battle tested mechanisms that we see within DeFi.
Mm-hmm.
And when it comes to lending and borrowing protocols, one of the easiest ways to assess the health is you look at bad debt, right? Is what's been liquidated and what hasn't been paid. And the problem when you look at things like that is when you take, let's say, NFTs that are houses, these are non-fungible, right?
Mm-hmm.
So you got to liquidate it in one go. And how do you do that? So it's either you sell it off chain, which takes a lot of time, it's not transparent, or you use methods like stability pools. If you're familiar with liquidity, if you're familiar with resupply or any other types of stable coins out there, they'll use a stability pool mechanism, and we'll be utilizing the same thing. So basically, we take the NFTs, we funnel them into a contract, which then spits out a fungible token,
Okay.
and that's what becomes liquidated. So as these institutions or large asset owners get liquidated, their assets get converted into the index token, and that's how it moves into retail's hands as well.
So,
And MD, feel free to.
no.
yeah.
Could I give that a shot, Brian? Because I
course.
think there's some jargon in there that I don't want folks to get. Because I mean, Crusher's bang on, and because we're so intimate with our protocol and project. Just to be clear, Brian, the gold is not going to be in our system to be used for collateral for participants. It's for the stable token business. What is going to be used for collateral is real estate. So as Kevin mentioned, the real estate would be in an NFT form, and it would be deposited on our digital on our application, and then someone would borrow against the value of the home. And because the prices of homes don't vary that much, we entail to have a scenario where the user experience should be stable, right? But I can't control how much people borrow. From a system perspective, the limits are going to be very conservative. Like, so if you have $1, the max you can borrow is, say, 50 cents. Okay. And then if you decide to borrow all the way up to your max, well, even if you get liquidated, I still have twice the amount of capital inside my system, right? And we've built a little process where the asset, the user that is being unfortunately liquidated, because we hope people don't, that asset then gets moved to a different part of our system, which then pays the bad debt. So we've built something inside our system to facilitate the liquidations. And we've even are going to be offering users extra time to fulfill the requirement, i.e. fill their collateral bucket to get themselves right-sized, just to help in case there is an event. But we've looked at real estate prices and variation going back to like 1985, and the way that we've parameterized our system, even if we had like a 2008 event, God forbid, like from a house perspective, because I think in 2008, the US's house prices dropped by like 40% or something. But temporary, Brian, it was. Unfortunately, I'm sure users would get destroyed in that like left tail event. But the protocol would still probably be solvent in a sense, just because of the pre-parameters that we have set up. I'm sorry if does that make a little bit more sense?
No. I was following both of you. Just wanted a little bit of clarity for everybody that's listening here, because obviously that's a big deal. So who are your core users? Is it retail? Is it institutions or protocols?
Yeah, I mean, this is always I feel like my favorite thing to answer. RAAC is for everyone.
Love it.
It depends on where you're kind of sitting within the triangle, because we are designed for institutions. We're an end, like with other protocols and partners like Instruxy, Ion. We truly are an end-to-end tokenization stack, right? It takes more than just tokenizing an asset. Anyone can tokenize an asset, right? But it's having liquidity on the other side and utility that really matters when onboarding assets. So there's a strong use case for institutions. DeFi protocols, the way that we work is 60% of whatever we mint from stablecoins will go into our core products. And part of that is providing liquidity to the broader DeFi ecosystem. Really, that's a big thing. And part of what we do is the rental income that's generated by the real estate is controlled by the token holders. So you could say, like, imagine like Curve Finance owns RAAC token. By owning RAAC token, they can direct the rental income to their own products within DeFi. So for protocols and things like that, we're almost like protocol owned liquidity as a service. And for retail, in terms of like farming, there's lots of yield opportunities, but the biggest thing for retail is RAAC token
Yeah.
itself, due to the nature of it. And like I mentioned, 60% of whatever we mint from stablecoins goes into our core product, but also 40% of the yield generated by these stablecoins goes right back to RAAC holders. So as a retail holder, you could think about it this way: is I could go deploy a couple $1,000s of liquidity to RAAC, or if RAAC is minted, uh, I don't know, like for easy numbers, let's say $1 billion. And yeah, so say there's $1 billion minted, there would be $400 million earning for the RAAC token, essentially. So you could either outpace, or you could just buy RAAC token, which is essentially doing all the farming for you.
Gotcha.
If that makes sense. I can clarify that part.
No, that makes a lot of sense. So from the retail side of things, definitely the RAAC token seems a little bit more attractive. Yeah, MD.
Yeah, so you can tell that Kevin's a gigabrain because he thinks on many levels of opportunity. Brian, this is where a couple of deeper layers of understanding of some of the designs in open finance that we've borrowed. I like to akin this to being a shareholder of a security.
Okay.
And you get a mail to come and vote because shareholders have voting power. But today, you might get that mail, and I don't know if you get shareholder voting mail if you own securities, but I don't know how many people vote. Like it's one of these things where it's usually the institutions that are holding the securities that really care about the governance of the shareholders because they're watching management and so through governance you can affect the way that the company goes, right? Mm-hmm. So again, open finance has taken this process, and because of the blockchain tech, you can now monetize this stuff. So protocols open up governance optionality, meaning if you buy my token, there's utility in governance. I give you a feature that if you hold it, you have voting power. And what's occurred, Brian, as you probably know and talk in your Maverick show, there's a gamification. There's an incentive being promoted for you to come and vote. So now it's interesting. Now you have a competitive force to attract your vote, because voting governance is a power. Like it's a cool feature to have, right? So so when you have that voting power, as Kevin was saying, in the liquidity game, okay. In the liquidity game, your voting power controls where liquidity goes. So if you are one of these participants in what they call a liquidity pool, where you've submitted your tokens so people can use them to trade and you get paid for that activity, well, the reward for that pool is impacted by emissions. Like, does it get certain like rewards? So it attracts more people, more assets, more participants. You know what I'm saying, Brian? And so if you have this system where you can drive liquidity, like voting power, and drive liquidity, protocols who have a preference to manage liquidity, they might be interested in owning that token for the voting power. And again, that is occurring right now in the Curve ecosystem, Curve Finance, because they created what is coined the Curve Wars. Mm-hmm. So they have a governance layer, and they're a decentralized exchange, so they have a ton of pools. This is where people go and participants can go and deposit tokens to earn rewards. There's a ton of volume that goes through it. There's multiple assets. But yeah, as a Curve voting participant, like holder, every 2 weeks you have a chance, Brian, to earn a little dividend just to vote. Pretty cool, man.
Yeah, I'm actually pretty familiar with that personally, and I'm sure some people in our audience are, like, voting in the governance. And actually, I love that aspect of it because it feels like you're making money while you sleep, and it's a way to be involved in direct the vision at the end of the day. I'm definitely curious about these RAAC bots. So MD and I were talking about it earlier, and love the art of these. You're incorporating NFTs into the platform. I would love for you guys to give a little breakdown of the RAAC bots, what role they play, and if NFTs play a bigger role possibly in your long-term vision.
Kevin, you're always the best at that.
Yeah, I mean, no, I think everyone knows. Brian, you've been in the space for a long time. Community is everything.
Sure.
We feel that if you don't have a community, you don't have anything. We took a strong play out of the Llamas book. Like we said, me and MD come from the Llamas. We feel it's one of the best places, if not the best place to be in open finance when it comes to being around like-minded people, builders, and things like that. So really looking to recreate that same energy and bring that to RAAC, and seems to be working out pretty well so far. I mean, a lot of great folks have already joined. Some may be familiar to viewers. There some KOLs that are kicking around that have joined. A lot of it has been a lot of organic growth, and the point is, yeah, to really build up the community and have them be the focus of RAAC. The reason we kind of built all this was for the open finance ecosystem, and it may not have been said directly, but me and MD have really worked backwards. It was, how do you solve sustainable and predictable yields? And then it kind of worked from there all the way to this whole institutional stablecoin vibe. But yeah, no, RAACbots are a community. They will be getting perks and early access and getting the all the focus from the RAAC team, essentially.
I love these, to be honest with you. I'm gonna put the link down for everybody who's watching the audience, but I think there's 1,111 of them, if I saw correctly, the same as DeFi Llamas, right? Yeah, 1,111. They're cool. I mean, I know they're packed with utility and probably some VIP access, like you just said, and they're just more than a picture, but they're very cool. So I applaud you and the artist and everybody who put these together, because I'm just kind of scanning. I'm scanning through them right now. And,
Brian, if I could add, man, because you asked a good question, like, are NFTs going to be part of our system going forward? And like, because we're digitizing a whole home, and that home is going to be represented by an NFT. So the answer is yes. I mean, we're also Llama community members. That's an NFT collection. Also, the RAAC bots are another curated NFT collection. As I mentioned earlier, hundreds of hours were put into designing the bots. There's a couple Easter eggs of our ecosystem supporters nestled inside the 1,111. And we, as participants, as I shared with you, I think that the NFT container has a lot of utility, Brian. And again, this is getting a little technical, but you notice how all your liquidity pools are represented by NFTs?
Yeah. Yeah,
So
they all
so
are.
so again that's where the people aren't necessarily seeing that, but it is. And so the container itself has a lot of capabilities. So we're always going to be looking at ways to enhance the collection. One is the supply itself is really constrained, so there's not a lot of them. So just by design, it was meant that way. And they're, like I said, they're unique. They're not carbon copy. But thanks for letting us share, man.
Yeah, no, they're excellent. I mean, I'm kind of I was in the heyday of that 2021 NFT run where basically like any mint that was worth pretty much nothing still 2-3x for people. But when we talk about like sophistication of, where we've gone, NFTs obviously took a pretty big hit, but now there's a lot of people because the technology of NFTs makes so much sense to me. And then you mentioned the community aspect of it. There's just so much of it that I agree with. But now you've really utilized something that's, aesthetically pleasing, that's rare at the end of the day, but also adds added utility to what your bigger picture is. Just cool stuff. I really like these rack bots. So I urge anybody that's kind of listening to the podcast right now, if you're interested, you should definitely check out these NFTs. I see some of them are left facing, some of them are right facing. Maybe that's just like my degen NFT mind that like notices small things like that. But
No,
one
shout,
more.
shout out to Llama Quest. They did a really amazing job. And if you look through them, you'll even find little llama Easter eggs hidden in the NFTs. It's amazing. The amount of detail that they were able to put into this was, yeah, just incredible. It was, yeah, amazing to see.
This is the rabbit holes I go down sometimes. I love the aspect of DeFi and passive yields and just earning. But then when you like kind of throw like a little NFT Easter egg game in there, part of a community that with all like minds, I eat this stuff up. So I probably shouldn't be talking about this so much on the podcast because I could go on and on about some of these traits that I think are super cool. Let's pivot. Well, we don't have to pivot off the NFTs, but I'm curious, like, how are you thinking about growing and engaging with your community as you expand to all these new markets?
Brian, I think it starts with education, man.
Yeah.
Sorry. That this is why we're running our third testnet right now, a testnet competition within our community, because again we built our application, our borrowing and lending application, so we want participants to test it out and find bugs and give us feedback on our system, on our interface. And so that's one way we're hoping to have folks learn. We have specific groups in our community Discord on different ways that you can learn strategies. We have a Leviathan news feed that comes in to keep people up to date. So I think that like the number one thing is helping people get up to speed with how to utilize this application, not even just at RAAC, but what's already existing in open finance today. Thanks.
Yeah, no, that's fabulous, and I love this, like the kind of the community involvement that you're building here. That makes very sticky users at the end of the day. I'm kind of like built for what you're doing, to be honest with you. But let's talk a little bit about AI because that's in January that was kind of like a talk of the town, and then we're starting to hear more about like the X402 and just like the incorporation of AI and crypto. My personal take is that like crypto and AI really seem to go together in a lot of unique ways. And the AI blockchain narrative has started to heat up a little bit again. Do you see RAAC using any like AI assistance or AI technology to assist maybe in like asset valuation or risk modeling or data transparency? Curious about like your overall thoughts on this AI sector.
Yeah, no, I think I can take this one. It's a very really great question. I definitely think there is a space for that. We have a couple folks that have brought it up to us, and it's just about figuring out the best way to implement it into our technology stack. I mean, for us, it wouldn't be about just sticking AI in for the sake of being able to add it.
Yeah.
I think we would really have to definitively map out and really dissect. So at the moment, there's been talks, but there's no definitive plan. But I mean, I think it would be like the tech is there to improve our own processes. So I don't see why we wouldn't, but it isn't anything meant to be like major part of our plans, if that makes sense.
Yeah, no, that was perfect.
Brian, it's got to be a resounding yes in a general way, only because it's a general purpose technology, just like the blockchain innovation was. And, you know, the chat was released December 22. It's October 25. The amount of resources that are going into this, it's being utilized every day by everybody at some level. And I only see it becoming a more powerful aid to help you in the risk management of your projects. So I'm optimistic about the technological benefit that that's going to bring everyone. I think it's up to us to maximize that where it helps us the most. But yeah, no, I don't think you can win without integrating it.
Yeah, I agree with that, but I see a lot of different layers there where you just don't want to be like, hey, we're using AI to say that you're using AI. There's real use cases, but it's, you know, everyone needs to flush those out and see how
100%.
Yeah,
You're totally right.
How is it going to?
That's why it's a general purpose. You know,
exactly.
There's going to be folks, you know, who are developer resources that are using it. There are going to be other types of resource that will use it in another way to benefit, either through efficiency, optimization. You know, it's ironic, Brian, because the Llama's actually helped incubate an AI project, and there's another Llama who is also running a project that has an AI unit off of it. The first one was Frock, and the second one is Gamok, Frock.ai, and then the Gamok guys have Gbot. So again, these are friends of ours within the community. But to your point, because I think it's a really great question, as Crusher said, it's an intelligent question, and more individuals should be aware, if they aren't already, of this capability out there to help everyone in some way or another, right?
Yeah, no, for sure. So what's next on the roadmap here, guys? You obviously have a very strong community. You're building a lot of very cool stuff. Any upcoming launches or partnerships or asset classes you're most excited about?
Yeah, no, I think the biggest thing on the horizon for us is our beta that will be launching soon in the next month or so. Probably the biggest thing to kick off the protocol. And from there, we'll start scaling up, which means so lending and borrowing real estate is what kicks off first. Stablecoin would come second, and then third would be mainnet TGE for RAAC token itself.
We all love a good TGE.
Which would
bingo bongo. There you go.
No, that's amazing. So so people in our audience who want to learn more or get involved with the beta, where do we send them? Where's the first point to go, and what should they do?
Yeah, Discord's a great place. Obviously, you chat with like-minded people. Meet the team, the folks. Our mods are fantastic and super helpful. straight degen quality dudes. So when it comes to understanding everything, like they get it. X is the next biggest one for announcements and things like that. Obviously, the Discord is gated to a degree. The way that you gain full access is by owning a RAAC bot. So if you really want to dive in and be deep in the community, then a RAAC bot into our gated channels is the best way. That's where we give the alpha, the first look into things. It'll always be there.
All right, so I need a RAAC bot. I'm looking at them again right now. I love that. I love what you guys are building. A lot of great stuff. You obviously both seem brilliant, and you really are going community first, and you're trying to grow the education. I love all of that. Really want to give one more shout out to anybody that wants to learn more. Check out their Discord, check out their website. I'm going to put all those links down below the video so you can learn more about Kevin, you can learn more about Mike, and really looking forward to having you guys on again. We should kind of plan it when you do the TGE. I know that'll be a hype time, so we should definitely get you back on the podcast.
Yeah, that would be incredible. What you'd have to fight me to say no to that one, sir.
I agree. It was
Awesome.
really nice, Brian. Thanks for hosting. You did a great job, and I appreciate the opportunity and time. And you can still come to the RAAC Discord. You're just going to be in the non-RAAC bot holder channel.
Sure, yeah, the NFT will give you like the closed channel access with just a smaller group. Yeah.
We've devoted one channel, the non-RAAC bot holder channel.
Yeah, that's awesome. Again, everybody that's still listening and wants to check more about RAAC, I highly encourage you to check out the links down below. I will post them. And again, Kevin, Mike, really appreciate having you guys on.
Yeah, no,
thank you.
Thanks once again. Absolute pleasure. And thank you to the audience and everyone at home listening to us today.